Hey, Tony Ivanov here, and today I want to go over a video lesson on VTL, the stock that went from 25 cents up to 70 cents in a single day, leading for around 200% gains. And I want to talk about how you can trade this stock using a strategy that I call buying previous resistance as new support. It's a very simple strategy that I use and all of my traders in TradeBuddy use, and I'm going to break it down for you in a very simple way. All right, so here we have my screen. You can see the chart of VTL. Let me just expand this out. Actually, let me just leave it like this real quick. VTL, this one had news. They had news yesterday in after hours. And let me just bring up the news here. Sorry, my screen is kind of everywhere right now. I just did a webinar. So VTL. The stockholders approved a business combination with Immunic AG. So this one kind of needs some backstory behind it. If you look at the daily chart of VTL, you can see that back in its history, up until around September of 2018, it was trading in around the $7, $8 range. And then, of course, there was some bad news and it gapped down heavily from around $6.49 down to less than $1. That's a very big gap down. And I haven't looked back at the news, but I can only assume that they lost a very important business partner, so the company basically became worthless. But now we see that the stockholders approved a new combination, so that, of course, is great news for the company. And if you look at the volume today, I mean, it's pretty simple to know that this was very hot. Over 150 million shares traded in a single day when, even when it gapped down, the most I had was like 50 million. So explosive volume there. So we know from the news it has some leg to it, and we know that by using the chart we can really trade this extremely profitably. So whenever I trade, I like to use the 1-minute chart and the 5-minute chart, and I like to use both the candlestick and the line chart. So this is going to be kind of controversial because I know there's so many mentors out there who preach you must use candlestick charts, you must use candlestick charts, which, I mean, they're not wrong, but it's kind of dumb to limit yourself to only one view. So I like to use both the candlestick chart and the line chart. And the reason why I like to use the line chart is because whenever you have these wicks that are extremely volatile and it's kind of hard to tell where the resistance is, when you use the line chart, it kind of gets the average of the price, and it makes it a lot easier to see where these levels of resistance and support are. And you combine that with a 5-minute chart that even averages out more, you can clearly see where the critical support is and where the critical resistance is. So I'm going to break this down and explain it to you step by step exactly how you could have traded VTL on the entire way up and the entire way down for massive profits. So VTL, first thing we know, the pre-market high is around 28.5. Now, I'm sorry, not pre-market high. It's the high in after hours / pre-market. So we see that very defined top there at 28 cents. And we see today in pre-market, it kind of retested that area and then pulled back. So it pulls back, market open. And I mean, this would have been pretty hard to trade, but one thing I do note from this is I really like how these candles, how these wicks are like they're piercing through VWAP, but then overall the candle's closing above VWAP. That's a very bullish sign. I personally would not have jumped in on this indicator alone, but it's a good thing to note because that just shows how bullish it is. The first real entry I would have said to take on VTL would have been the breakout over the pre-market high. It's a pretty simple concept. We know that this company has great news, and simply having a breakout over the pre-market high shows that it's able to break higher, and that's a very bullish sign, and people just love to buy the breakout over pre-market highs, especially on stocks that have news. So of course, that was the first area to jump into. Now from here, we're going to go into the concept that I explained in the beginning of previous resistance holding as support. So this is a very basic concept in technical analysis, but trust me, it's so powerful, and it's honestly the reason why I'm a consistent trader Focusing on this one idea and this one idea alone has made me most of my profits in the stock market. So this idea is that whenever we have a level of resistance, whenever the stock is able to break over that resistance with volume, it should hold that level as a new type of support. Previous resistance becoming new support. And this is powerful because what you can do in an uptrend is you can just identify where this resistance is. And then once the breakout happens, you could just have your dip buy orders near this new level of support, knowing that it should hold as resistance. Now, of course, nothing is 100% perfect. It's not going to be correct all the time, but more often than not, this will hold as support. So if you can plan your entries around this resistance level, you can have a very nice trade. Now, for this instance here, I personally was not able to get filled because this did not pull back far enough for me. I like to have my orders as close to this resistance as I can because I don't want to risk too much. So this one here, I actually missed it. But you have to understand that's fine as a trader. We cannot nail every single up move and down move. We have to be selective. If you want to be consistent, you have to be disciplined. And part of that discipline is missing some trades. So on this one here, I had orders underneath this 30 line, this line to 30 cents. I had orders between 30 cents and 28.5. It didn't get filled, so that's that. That's just fine. But we do know that there is a new level of resistance at 38.3. Because we made this top here at 38.3. So I waited and I waited, and we saw this breakout happen. So I didn't want to buy the breakout right away. What I want to see is that previous resistance holding as support. So we see we had this one candle that shot up quickly. And this is kind of a good example of why I don't like to buy breakouts right away. Because imagine you bought this breakout at 38.5, so you get filled. And then it goes up to 40 cents, looks great, but then it slams right back down to 36. Would you have panicked out? Maybe. It depends on what your risk level is. But that just, it's not necessary to buy right into it. Keep in mind, it's okay to miss trades. So I let this action happen here, but once I saw it, retest this and hold, that's when I was buying some shares. Just using the same concept of previous resistance holding as support. It's a very powerful concept, and you can see that whenever a stock is in an uptrend, it works like a charm. You can see it happened again here off the 40-cent line. It broke out of 40 cents. It went down, retested that, held as support. See here too at the 42-cent line, made this resistance. It broke out of it, went to 45, pulled back, held it as support. Another example of it doing that pattern. And then you get this kind of big explosion up to that 60-cent line. Keep in mind, we had this previous resistance here at 46 cents. So I sold into this spike here, and then I said, okay, where's the next previous resistance? We see it here at 46 cents. So what did I do? Followed the same pattern. I had orders here at around 47, 46, and some in 45 just in case I had like a long bottom wick. And I let the price come to me. Keep in mind, I put these orders here when this price was at around 54 cents. I left limit orders down here knowing that if it does go down to that price, it's a very high odds of success. I don't know for sure that it's going to pull back that much, but if it does, I have very high odds of success, and that's what matters. Keep in mind, like I said, we don't want to nail every single potential move in a stock. We want to nail the stocks moves that have very high odds in our favor. And myself, with how I've done this system over the years, I have very high confidence in this strategy, and I know it works over time. So that's why I had the confidence to just leave my orders there. And once I got filled, it was great. I had a very nice average, and I was able to get in at a very awesome price. I took some profits at that 60-cent line, and I took more off as it broke out higher. So that's kind of the key thing. Once you have good entries, taking profits is very easy. You just take profits at resistance, and of course, always have a defined profit target that you want to hit. I personally average around a 12% win rate, or not 12% win rate. My average win is 12%. So usually when I'm up over 12%, I'm very okay with taking profits. Keep in mind, the goal with trading is not to make big money with one trade. The goal with trading is to make consistent profits over time, because that's how you sustain your wealth. So focus on being consistent, focus on locking in those nice easy gains, and don't focus so much on having those nice big home runs. Now, I know it looks appealing to have those big, $10,000, $20,000 days, but those also come with big losses. And those are not able to, most people are not able to handle that type of trading where you're up 5,000, down 2,000, up 10,000, down 10,000. It's very stressful. If you just focus on the consistency and scale that, it's going to be very easy to trade. So after all of that, we do know that the previous resistance was off this 60-cent line. So following the pattern, I was dip buying off that 60-cent line, taking profits into the resistance, because at this point it looked like it was channeling. It was just up so much at this point, it seemed like it needed to do some consolidation. And considering that on the chart, the gap fill price was at 60 cents, I knew that it was going to have to consolidate along this 60-cent line a bit. And what we know is that as soon as that line doesn't hold, this stock is now in backside and you have to trade it differently. So I had orders along 60 cents. I took some profits into the 65s and 66s. And then right here, when I saw this last retest, I didn't want to buy any shares because at this point it looked inherently weak. Now, I talk about this a lot more within TradeBuddy. It's a bit more like of an advanced topic of how to read this chart and how to read the weakness. But I do talk about that in the TradeBuddy course. But essentially, the first bounce is always very high odds. The second bounce is okay odds. And then the third bounce, if it looks weak, it's almost not worth it to trade. So there, I had no orders and I didn't get caught on this downfall. But as we do know, we had previous resistance here at 46 cents. So I did have more orders to dip buy at 46 cents because we know previous resistance should hold as support. So I had orders there and I took my profits into VWAP. A nice, easy 10% trade there. So there's my quick lesson on the strategy that I like to call buying previous resistance as new support. Like I said, I use it all the time in my trading, and so do so many traders within TradeBuddy. So if you would like more information on this tactic, I do have a free PDF in the first link below. It's called the Top 10 Trading Strategies in 2019. There's a free PDF and a free trading workshop. There's 3 videos, total over 2 hours of free content, and it's going to help you become a better trader. So check that out. If you have any more questions, feel free to leave a comment down below, and I'll see you guys in the next video. Thank you for your time. Hope you have a great weekend.